Hi everyone, your next live stream is about to start, but whilst you're waiting, why not check out Switch Markets, one of our partnering brokers. Switch Markets is a regulated broker and we've been partnered with them for nearly 2 years now. They're a broker with over 100 different types of trading instruments on offer. You can trade Forex, stocks, commodities and cryptos, pretty much everything that you're ever going to need. You get fantastic execution, great trading conditions and super tight spreads, some as low as zero. In fact, they also offer accounts with no commission at all, if that's what you're looking for. Another key reason we recommend Switch Markets is because their end of day candles are set to New York closing times. This is crucial. If you're not using a broker that sets their end of day to New York close, then you simply aren't seeing the market structure in the same way that the professional end of the industry does. This can have a knock-on effect in your trading, especially when it comes to drawing support and resistance areas. Something else which other brokers overlook is customer support. This should be a key factor when you're deciding which broker to work with. At the end of the day, you're trading your hard-earned money, and you need to have confidence that the broker you're working with is there for you when you need it. Switch Markets have a fantastic support team that operates internationally all over the world, so whatever your problem or concern, they've got you covered 24/7. So go check them out, and if you're a trader still practicing and finding your feet, don't worry, you can register for a free demo account. And just between ourselves, if you let them know that myself, Nick, or Shane, or Connor have sent you along, they might just have a few offers on at the moment for you. Right, enjoy the session, good luck with your trades today, and let's get on with the next live stream.
Hello everyone, welcome back to the Trading Room. I'm Shane Vernier and this is the Asia Pacific preview. Really not much going on in the markets, not a whole heck of a lot. It was a slow, sluggish Wednesday with no real events of note. What a light show! What an incredible turn of events we saw. The different interpretations of what transpired at the Fed announcements and the Fed decision. It really was something else. And as I look over the notes and I look over some of the stories, the lead stories, and the tone of what we're seeing and the price action of what we're seeing, it's really a fascinating case study in market volatility and how. There's two sides to every trade. There's two sides to every trade. If you're, just because you're buying doesn't mean the whole world's buying. Just because you're selling doesn't mean the whole world's selling. So always remember that there's two sides to every trade. And right now we are really going deep into the psyche of the market itself and trying to figure out if this is just sort of a fool's rally, if this is just a crazy overreaction and crazy gamble that some folks are making, or is this the new norm? Have we already priced in what the Fed's going to do, and do we really see that kind of upside for risk assets? It's a fascinating look at really what we've been talking about for all angles, 360 degrees for a long time now. So it's good to see everybody back. It was sort of a fascinating day. We've got more for you tomorrow. BoE and ECB, Connor and Nick are going to be all over those. Those are going to be coming to you live. We'll have the press conferences. We'll have the decisions and everything. So if you're going to be trading that UK European session, I would say stay put. That's what I would say. So yeah, welcome back everybody. We got a lot to go over. Good to see a wizard. ARC 1970, always a pleasure, ARC. At Shane, are you surprised with the market reaction? No, not really. We sort of had a meeting earlier today, and I thought that I still am sort of the camp that it's possible those all-time high levels get run in the equities indices before we see a big reversal. And I have my reasons for saying something like that. I don't necessarily mean to put down anybody that's short this market. I think you've got to trade your strategy and go with what you have, go with what you got. But for me, I'm seeing signs, specifically technical signs, that I don't know what's going to make the bidders stop. We'll go over a few of the things Powell said today, but I don't know what's going to stop the bidding. It was a fairly hawkish engagement, and I'm looking at the headlines, and it's coming off dovish. I don't know. I don't know how that goes. So we're going to get into that in a second. So let's see. Tonto, good to see you. TR28, love the Fed stream. Great, TR. Glad we could help. Glad we could bring you coverage. It's always a pleasure working with those guys. Anytime I get to work with Connor and Nick, it's fun. We just have fun with it. So it's a pretty good deal. Gerald, good to see you. Gerald, freshman, good to see a freshman. Let me see, freshman, by the ECB, why Nick says the ECB doesn't want the euro strong above 110. Yeah, just be sure to tune in and ask Nick that. I can't speak for him. I really don't know. I know that his knowledge of fundamentals that surround the euro and the ECB, those two guys put together, I mean, when it comes to the BoE and the ECB, I defer to their expertise. I mean, if you want to talk crude oil and Fed, I've got a decent opinions there. But yeah, just tune into that stream. I'm sure Nick's going to tell you all about that 110 level and why he is sort of into it the way that he's into it. Lita, good to see you. Always a pleasure. HV, all right. Okay, guys, let's get to it. Big active week. Tremendous week on the markets thus far. First trading day of February came in with a boom. To be brutally honest with you, I took some hits this morning. Trading crude oil. Some things transpired. Major bearish break that I didn't see coming, and I don't think anybody saw coming. But anytime, one important safety tip, though, and one of the great things about being a scalper is that there's no moral victories in trading. When you lose, you lose. But I will say this. If I was a position trader to the long, it would have been, especially a day trader to the long side, it would have been a challenging day for the account to weather. So one of the great things about being a scalper is you actually pick yourself up and come back to the next session. So that's one of the reasons why I trade the way I do. That's for sure. All right, so on tap for Thursday, we've got BoE interest rate decision. We've got ECB interest rate decision. Those are the two big events. There's also some things going on during the U.S. session that leading into NFP. We haven't even talked much about non-farm payrolls this week just because there's been such a power-packed, just economics calendar full of central banking events. So don't forget NFP. That's going to be a big one. I will preview that on tomorrow's Asia Pacific preview. So be sure to be ready for the Friday morning for you all down under. But for me, it'll be Thursday evening. But we're going to get the table set and we'll get you locked and loaded and ready for NFP. Going to be a lot of pressure on those NFP numbers, and we're expecting a little bit of volatility on Friday as well. Just very quick, we're going to run through basics of Fed policy to sort of set the table so you know what I'm talking about here and I don't just get off on a tangent. What happens when the Fed adjusts policy? Well, quantitative easing, remember, that's interest rate cuts. That's open market operations where we're pumping money into the system. We're buying things. We're buying mortgage-backed securities. We're buying bonds. We're not necessarily holding them or selling them. And what happens to that when we pump the market full of money? Dovish USD, what does that mean? You have a decreased dollar value, and that means risk assets go up. Things like stocks go up, and crypto goes up. Typically, commodities go up. Commodities not a risk asset, but typically it reacts in a bullish fashion. Now, the second facet of that is quantitative tightening. Now, this is what we're doing right now. This is interest rate hikes. That's when interest rates go up. And this when we reduce that balance sheet, I thought that there was a great discussion today about balance sheet reduction, and that's when the Fed's getting rid of its holdings, so it starts selling bonds, and there's going to be, like we said, plenty of takers with a prime rate around 5%. So that's the difference. Now, quantitative tightening is typically bullish for the USD because it increases its value. Why? Scarcity. Decrease the money supply, okay? Dollars are hard to come by. They're worth more. That's it. So don't get confused. We had a long discussion today. Don't get confused about the verbiage and the nomenclature. When you turn on Bloomberg or you turn on CNBC, there's some truly brilliant people on there. And when they start talking about finance, we all want to understand what they're saying, but it's sometimes really hard. I was watching Jeffrey Gundlach today, the Bond King. A brilliant man, had no clue what he was talking about most of the time. And I'll just be straightforward about that. And quite frankly, I don't think anybody did. So when you get wrapped up in the biggest thing to do is don't just go, oh, well, I understand what that means, or I know what that means. If you don't know what something means, step back, figure out what it means, and don't let anything you don't understand impact your trading decisions. Always know what you're doing and be in complete control. Gundlach was talking about bonds and risk and all these different things. And I said, okay, well, I don't understand that. I don't understand that. And then he said, I'm guessing we have one more rate hike this year. I was like, I understand that. I understand that. So always stick to what you know and always look to build that knowledge base until you're comfortable with a lot of different concepts. So that's what I would recommend. And at 44 years old, 44 in June, and I've been in this since since I was 31. somewhere in there. Been doing this for a while, and I'm still learning stuff every day. So that's one of the great things about if you're intellectually curious and wanna learn, the markets are for you. Because it's a riddle wrapped in an enigma, that's for sure. This is a good look at your dollar index right here. This is a weekly chart, and I've been harping on and on about 102.35 for seemingly ever, and it looks like we've broken from that level. 101.17 is what we're printing right now. If we go to our daily, we had a big time pullback in the USD. This was a good one. Came off almost a full percent, and you can see we actually broke out of this range, this trading range, which was always predicated upon trading at least 102 and 102.30 every session, and today we didn't, or yesterday we didn't do it, Wednesday we didn't do it. So be ready now. If you're trading this DXY, and I know there's some of you that trade the DXY CFDs and trade maybe, I don't think anybody in here trades the DXY futures on ICE on the Intercontinental Exchange. I don't think anybody's doing that, but if you are, this dollar index, remember the UK, BoE, Great Britain pound, ECB, the EU, the euro, those are huge parts of this DXY basket, that dollar index basket. So we are locked and loaded. We're loaded for bear when we're looking at the overnight possibilities after a BoE and after an ECB. We're going to talk about what to expect out of there very shortly. The other big thing I would point, this is an extremely dovish reaction. This means the dollar is losing its stroke against the global currency. So even though we raised a quarter point, and we'll get into the verbiage and some of what Powell said, and promised more rate hikes and promised tightening and said inflation's coming down, but we're not there yet. Throughout all of this stuff, it didn't matter to traders today. They sold their dollars. So when we're looking at this chart, I'm saying, okay, this is sort of a big time risk on for something like stocks. I mean, the NASDAQ was the big mover and the shaker. This pullback translated into an amazing, and it really was an amazing intraday rally, intraday buyback. This right here is when the Fed meeting did occur right there. There's your announcements and then your presser, and that was what unfolded, and we've just been going up ever since. So do we get a pullback tomorrow? Do we get a pullback Thursday? It certainly is possible. It certainly is possible, but risk is definitely back in vogue, and that dollar's pulling back a little bit. So what did Powell say that could have driven the market haywire? What could he have possibly said that would have put us in a position to dump our dollars in belief that it was a hawkish type of a thing, or excuse me, that the rate hikes were over and that we were going to switch to dovish policy? And if you just take a good look at this CNBC right here, this gives us a good inkling. Full recap of the rate hike and Chairman Powell's news conference. This link is just to cover a CNBC basically. And all these guys are weighing in. All these economists are weighing in. Powell's focus is the labor market, says Gary Cohn. Well, the labor market's still robust. And that's headline right there takes us right into NFP on Friday. If, in fact, you do see the big downturn in NFP, and then we chase that with some big-time CPI numbers about a week from Thursday, then we have a problem. Then we have a problem with this dovish narrative. The idea that we were data-dependent. Powell says don't expect a rate cut in 2023. That's exceedingly hawkish because the derivatives traders are pricing in just that. I mean, look at these headlines that were coming out as it was developing. Fed meeting leans slightly dovish, investment strategist says. I don't know how you get dovish out of that. The idea is that now we're data dependent. Remember that verbiage during if you didn't see it, there was a point where it says we're going to evaluate the data and we're going to be data dependent. Well, that's a very dovish way of looking at things. So when we're looking at these headlines, Powell expects growth at a subdued pace. So the idea is that inflation is going to come down, economic growth is going to come down, unemployment's going to go up a bit, and we're going to back off of our aggressive rate hikes. Is that enough to send the NASDAQ north? The NASDAQ north by by that many points? I mean, realistically, when we're looking at our charts, NASDAQ US 100 had put in an incredible rally today. Really an incredible rally, 261 points, 2.16%. So I'm trading the NASDAQ right now. If I'm looking at, saying, okay, what could be in the cards? You can see all this analysis. We didn't get a deep enough pullback to get long ahead of the meeting, but take a good look at what we have now on the daily. What you need is an intermediate term, maybe a little short-term swing top, and then we're definitely going to be buying pullbacks. I think a lot of folks are. Do you want the 38% down there at 12,244, 12,250? Certainly possible. Do you want 12,082 or 12,1? It's possible. So I'm going to be watching this very closely. I expect some sort of pullback during tomorrow's session, during the Thursday U.S. session. I really think that that's going to be what develops. One of the reasons, though, and we can't completely ignore some individual stocks. Take a look at what happened with Meta, and this is Facebook stock. I don't know if anybody owns it there, but this was absolutely a huge move, really a staggering move. That one came on Tuesday. You're up 23% Tuesday, and then Wednesday's session, you're up another 3%, 2.79, and look where you're at in post-trade. And what happened? You had a big earnings report. You had a big earnings till that's April earnings. This is today's earnings. You had a big time earnings support. You surprised on the bottom line, and that absolutely has driven the market wild over Meta. So you see our gap, our long-term gap up here, just to go to a daily. Is this the bottom? Is this the bottom for tech? I mean, are we in the beginning of just crazy, speculative, irrational markets? I think it's certainly possible. There's your big move today. Let's go right here. We had a gap here that was filled, a gap back there and back from October. But the one that we're focused on and the one that the market's focused on is right up here, 269. 269, somewhere dead center of that gap. So for me, when I'm thinking gaps, and that was right after we first started streaming, or I first started streaming back in February of 2022, we lined that gap out. Will it get filled? We're at 153. Look where you're at in post-trade. You're at 182.75 post-market. When you start eating up $30 after an earnings meeting, and you're still looking at your gap area being right up here in that 265 area, somewhere like that, we could easily fill this gap. So this type of action in something like Meta is definitely helping the NASDAQ. So let's not get too carried away with everybody's just running into risk crazy willy-nilly. That's a major move. That's going to help the index as a whole. So definitely wanted to point that out and sort of state that maybe it's not a broad-based rally, but maybe it's just a few isolated stocks. And Meta is certainly one of them catching the bids. So Peter Paul, good to see you. Conker, good to see you. Jolie. Is it a coincidence that the DXY retracement of 16 to 20th, 14 is the same as September 19th is today? No, it's really not a coincidence, Jolie. It's the market is just moving in legs. I mean, that's sort of the idea behind fractals and the way that the greater the whole is made up of smaller parts that resemble the whole. Essentially, that's fractal geometry in a very tight, basic nutshell. And that's why a lot of times those retracement levels will line up for you. And that's what I look at. That's what I look for to enter trades, among other things. But that's one of the big things I use for the Forex and currencies in particular. We get those big, broad macro moves, and then those smaller moves oftentimes reflect the greater market structure. And when we get those nice waves and the pullbacks and everything symmetrical on multiple time frames, you'll notice our levels will line up. So yeah, it's no real coincidence, Jolie. It just means that price is moving sort of in an orderly fashion. And you could take that for what you want out of it. But for me, that's been the crux of my trading strategy, is that concept of fractals and fractal geometry. The whole is made up of parts, of smaller parts that resemble the whole. That's a long discussion. I don't know if we have time for that one today, but we'll get into it one of these days. Media coverage, you'll see these are the big headlines. Fed raises rates a quarter point, expects ongoing increases. What does that mean? The more Powell spoke, the more the stock and bond markets rallied. So right here, Bloomberg comes in and they sort of paint a dovish picture of what happened, and then the CNBC is telling you, well, the quarter point expects ongoing increases. That in itself is a very hawkish headline, and this is more of a dovish tone. This is saying, hey, listen, it doesn't matter what the Fed does. The markets are going up. Boy, that's crazy. In any case, a quick recap. Our Fed expectations, a hike or cut going into Wednesday's meeting. We priced the quarter point and pretty much nailed it. So there was your Fed interest rate decision. We are now at 4 3/4 point. That is up from 4.5 points. And then here is our big, here's the big enchilada right here. Global interest rates. Now tomorrow, this chart's going to look very different. It's going to look very different because you've got the ECB getting involved, and you've also got the BoE getting involved. So are we going to see these robust rate hikes coming across the boards tomorrow? More than likely, yeah. More than likely, yeah. We're looking for a half point out of each, both the BoE and the ECB. So right now, the global hawk, as it were, from the developed nations at least, would be your Fed. Your Fed is still raising rates. The BOC sort of backed off of their rate hikes they did a while back, and now they're trying to taper that down. And the jury is still out of what the Reserve Bank of Australia is going to do next week. I think they're watching the currency markets and watching the global economy very closely before they make their decision. And also the RBNZ, which has been one of my hawks, 4.25%. We're just going to see how they deal with a CPI that came in hot and also an unemployment number that clicked higher. So our global on our spectrum, the Fed has got it. You have to put the Fed right up there towards the hawkish end of the spectrum right now. I think a lot of other countries would like to back off of these rate hikes to try to get that economic growth going. We don't know when you can do that safely. When's inflation in the rearview mirror? And that was the crux of the Fed meeting today. Even though we see positive signs and the disinflationary cycle appears to have begun, we're not there yet. We have a lot more work to do, and the markets really took that as a dovish type of a thing. As soon as Powell said data dependent, the markets swung, and they swung big. I was watching the Nikkei. If you guys were watching the stream, I was watching the Nikkei. Absolutely exploded in the 3 minutes after Powell said data dependent. So that was a phrase that certain traders were looking for, risk traders, guys that were going to dive into the market to the long side. And in my view, it doesn't get much more risky than taking positions on the yen or taking positions on the Nikkei, because those assets are just tied at the hip to BOJ, unlimited QE seemingly. So those were big moves for me. Even crypto fared fairly well. I don't know how they're doing going into the Thursday session. We'll have to check in on that in a second. In any case, these are our expectations. We're looking for half-point rate bumps here. We'll see exactly what we get. Nick and Connor will be all over these. They'll take you down. They'll take you where you need to go. Certainly take you where you need to go when it comes to the BOE and the ECB. But for now, we're looking for them to follow suit during the overnight, and we think that that's going to be sort of the modus operandi moving forward. So that's a look at in a nutshell what our fundies said for today. Now it's important that we get into price action. As you can see, this meta was just an explosion and an absolutely huge trade. But I mean, we have levels everywhere, and right now it's just no rest for the wicked. Take a look at this area, this stuff going on right now with the dollar yen. Dollar yen's coming off. We have a very nice long-term support level there, 62% of that 2022 range. An exceedingly important level in my book is pretty much in play at this juncture. I had outlined 128.25 buys somewhere in there, and the heat is on, the pressure's on this pair. Let's get rid of the microwave and just focus on the macro. And this is what these big picture events can do. These huge market drivers can do is bring your levels into play, levels that you didn't think were going to be into play. Well, they're coming into play, and there's a lot of them, specifically as it deals with the majors. Now, right here, 128.17-ish. I like 128.25. I think you could get away with buying that. If you were to buy that, then you'd be looking at a 1-to-1. Probably stop myself out down at 127.89-ish. If you wanted to play it safe, you could always wait for confirmation. And in my view, that would probably be a 4-hour candle. Look for a test underneath 17 and then a close above that zone. I would be highly surprised if 121 gets involved. But if it does, that means there is a tremendous, and I mean an absolutely tremendous amount of action on the yen. But you can see exactly what happened here. We were in an absolute holding pattern, and then we broke, and now we've got the big zone in play, and this level's held up for us once before, came right down, tested it out, and it looks like we're going to test it out again. So that's a big zone for me. This spike low would be in my mind somewhere as well. Your low right there is 127.21. So, do you want to risk 100 pips on this? I wouldn't. I would step up and be looking to scalp. I think the dollar is taking some heat right now. I mean, it's taking some big time heat. And you don't know if the investors are just going to completely bail out on the greenback. And if they do bail out, you do not want to be holding these positions as these markets go crazy and reprice. For me, I would much rather take my scalp, get stopped, and then look for the big move beneath, and then look to sell and get with the bearish pressure. In my view, it's a high-risk trade to sell up into what's been stiff rotation, but if we do extend past that support level, and maybe we break beneath 127 and make a run down at this spike low back on the 16th of January, then we can start talking about selling retracements and feel pretty good about it. For me, though, right now, I'm looking to the long side of this market. Let's take a look at the 30-minute chart. I'll allow looking at a 30-minute chart on Fed Day just to get a good idea of how price action went, and you can see exactly how it went. Boom, there's your pre-announcement, and then right there you've got your big move, then compression, retracement, compression, break. So as we go into the Tokyo Open, I would be shocked if we don't put in a hard test of 128.18, somewhere in there, just for instructional purposes. You can see exactly what happened with this pullback, this intraday pullback. Boom, there it is. There's your spike high right there on your Fed news. The initial move was hawkish. We as soon as Powell started talking, he comes out and he says, "Listen, everything we covered, we covered it." He said, "Listen, we're going to stay the course. We're going to get rid of entrenched inflation. It's the single largest risk to the world today, to the global economy, to the U.S. economy. We're going to get rid of entrenched inflation. We're going to stay the course. We're going to reduce our balance sheet." All of those things prompted that initial hawkish reaction. The dollar gained value. And then we started talking about being data dependent. And then we started saying the disinflationary cycle has begun. And then everybody started dumping their dollars. That's what happened. It's happening as we move into the Asia Pacific session. The continuation is on right now. So where does the dollar, where does the dollar bottom out here? I don't know. I won't venture a guess. But we should have some decent scalping areas to target. That's what I would say. So I'm looking very hard at that dollar yen. I think that's oversold in a big way. We just have to wait and see what the technicals show us. This is another one, dollar CAD. Now this is fascinating stuff here because you didn't get the move today out of the dollar CAD that I thought we would get. We just didn't get it. Specifically, if the dollar's losing stroke, you would be dead set on seeing some bullish price action in WTI crude oil, and you didn't see it. Didn't see it at all. So that without that action, without that nice big rally, or at least a dead cat bounce at the end of the session, a big one, a formidable one, there wasn't really any reason to sit here and say, well, I guess the USD C80 is in a holding pattern now. There wasn't the catalyst wasn't there to drive the Canadian dollar, and that's crude oil. So right now, if you're going to trade something like the dollar CAD, you've got to be looking at crude oil. Crude oil $77. It's up a little bit since the electronic open, almost 1%. Is today the rubber band, the snapback day? Maybe. For me though, I mean all systems go here. If the dollar keeps losing its puff, which it is right now, and you get that big time rally out of WTI crude, this 132 level more than likely will come into play. 132.09 should treat you fairly well there. 132.09, stop yourself out at 131.71, 38 pips. If this market does open up, it looks to me like it will. We just have to wait and see though. You don't know. You just don't know. You just flat don't know. So another thing that everybody's into, gold. We were on YouTube, and literally everybody in the world wants to know how to trade gold. And we have some expert gold traders in the room. My expertise is not for the gold markets, but I like my approach. I'm fairly confident in my approach to the markets. And you'll see right now, what did we have? We had that big sell-off. We went down, tested out 1900 on Tuesday, and now we broke on the Fed news. We've broken above that 1950 level, which was this range. Now, are we going to creep back down in this zone, or are we going to extend higher? It looks to me like we're going to fall back down in that zone of between 1950 and 19.25. Now, the thing is you can't sit here and say, okay, sell right now. Because if the dollar keeps losing its stroke, and it looks like that's going to be the case, at least going into the ECB and the BoE, where does that leave something like gold? Probably leaves it rallying if the dollar continues to get kicked around here. So as we look at this stuff, as we look at these technicals, I would say I'm still going to be looking at 1971 50s, 1972 sells, and then your pullback buys from 1896 to 1898. That's where I would be looking. and nothing's changed for me. Now, let's say I want to get aggressive and say, okay, Shane, you've been citing those same levels for literally a week now, and that's sort of the nature of what I do. But also, you got a 3-day range here. Now, do I want to get involved here? Do I want to go, okay, spike low, and let's say our intermediate term spike high holds. What do I have to buy? I'm buying 1935 on a trend play. In my view, we're not trending. Now, if we do go up and test topside resistance, now we're talking. Now we're talking about buying the top side of our range at 1945. Maybe we drive a little higher, and then we have an opportunity to buy right around 1950 on a pullback from like 1981. That would be sort of more in my wheelhouse, what I would prefer doing. Now, big picture, you may want to get active right now on gold and say, listen, we know there's going to be some volatility. Well, then you can go to your 4-hour chart. I fully expect gold to trade with a range this evening or today during the Asia Pacific and during the UK session. Fully expect it to trade with some kind of range. I don't expect it to be very quiet at all, but your spike low right here, and then your spike high, that's your 4 hours. So you took your big Fed bar. So there's your pre-Fed bar and your Fed bar, and now you're looking at 1942.60. You could certainly do that. I would be more patient. I would wait for a deep retracement and fill in this 4-hour bar a little bit. So probably 1934 or 1928 would be my buys, the ones that I would favor. But you just sort of to each his own. How do you want to trade this? Do you want to be aggressive or passive? I'm more than happy to let the market come to me, come my way, instead of just going in there like a bull in a china shop and trying to run everything over. In my view, that's going to be a real tough scenario. So that's what we're looking at there. Now, as far as your cable, we might as well look at the cable and the euro, seeing as how we've got those big news events coming up. To set the table from a technical perspective, what I would be looking to get accomplished here tomorrow, going into that BoE meeting, there's a few things that I'd be keying on. The first thing I would be keying on here with this cable is your double top. You've got a high right there. You've got a monthly double top, December high, January high. You've also got 62% of that 2022 range at 124.50.52. So you've got a double top and you've got this area. If you're going to sell right there, if you're going to take that to the short, I recommend not necessarily putting a position on there to the short. And the reason why is you've got a double top, you've got a key level right there at 124.50-ish. If you do get that break above the zone, then look out. We aren't just going a little bit higher, we're going a lot higher. And the biggest thing you don't want to do is go along for that ride. If you do see the big break and the big rally, you don't want to go along for that ride because that could put you in a precarious position, and that's somewhere you don't want to be. You don't want to be up here at 126 or 126.50 going, boy, I hope this thing stops, because we could be looking at 130s. We don't know. We don't know how much this market has in it. Right now, the game is changing. The central bankers are jostling. The big money is strategizing. We don't know if it's going to be for or against the dollar long term. Right now, the action towards the USD is dovish. So, be careful if you're short here. Be careful, because that area right there, you could see an extreme move just above that zone. For me, if you wanted to scalp it, I can't really blame anybody for doing that. For me, I have no desire to buy a pullback. This is an incredibly tight range, and that's one of the reasons why I do believe that if this thing breaks, we're really going to break. We're not just going to break a little bit, we're going to break a lot. So for me, I have no desire to buy or sell from this area. I would like to wait in perfect world, and I'll just show you what I'm personally thinking tomorrow. Here's your 4 hours. There's your Fed bar. Now, if you do get some type of extension above this zone on the BoE, perhaps, or maybe even on NFP, you could build a very nice Fibonacci retracement level, something like this. Maybe you get that run up to 125.50-ish and have an opportunity to have a 38% that coincides with this key zone that's been great resistance for so long. Maybe that's your buy. Maybe that's what you can get done there. So for me, that's how I'm going to strategize. Even if you go higher, something like that, 125.770 or 125.75-ish. I think that type of trading is going to put you in a good position, as opposed to just, you could buy right now. There's no law against it. It's your money. Feel free to do whatever you see fit and get on the right side of these markets any way you know how. For me, for what I like to do, very cautious. Don't really want to be on either side of it right now. But that key area for me is everything. And that's how I will craft my trading strategy going through the BoE and probably into NFP. So that's a good look at the cable right there. And as far as the Euro USD goes, I mean, this thing is just an absolute rocket ship. You can see we're up above 110, 110 and a quarter. For me, you know, it really pans out to which levels come into play first that are going to get me involved. And right now, I mean, you can see that the buyback is on in the Euro. 2022's range. There's your high. There's your double bottom. Now you're rallying. Look where we're closing right in on 78%, 110.74, and then you've got that Bollinger midpoint right in there at 110.67. I mean, that's it. I mean, that's a hot zone. That's a hot resistance zone. You could step up and sell in front of that. 65s, something like that. Stop yourself out up over 111. You could certainly do that. You could also wait for confirmation. Wait for the ECB to talk. See what happens. Make sure, maybe you get that 4-hour retracement. Maybe you get the big move and then the close down in here on a 4-hour bar, and you can build that short trade going into the U.S. session, anticipating that maybe the dollar picks up some bids going into NFP or during the NFP. So, these things are all alive. We have macro levels really coming in everywhere, but that's how I would approach it. I'm being patient with the cable. As far as the Euro USD goes, that's a fantastic zone. If it gets swept out of the box, so be it. I mean, that's a trade you almost have to step up and take if you're me. So that's what we're looking at there. Big stuff. And as far as equities go, buying pullbacks, gold. We went over the gold technicals and the gold outlook. So there's a little bit of work here, but there's trades all over the board. There's absolute trades all over the board. Freshman, do you expect a stronger Great Britain pound by the 50 basis points of tomorrow? Yeah, I do. I think that if the Bank of England steps up to the plate and they hike 50 basis points, that's going to bring a little bit of stroke to the pound. It's sort of, think of it as keeping pace. The UK is in a different position than the United States. The UK is in a recession for all intents and purposes. We've seen a lot of talk from the BoE about a deep recession or a slight recession, deep recession, whatever you want to call it. And as we move forward in time, it's harder to raise those interest rates by big chunks when the economic pressure is there. We're not really seeing that pressure in the United States just yet. It's not palpable, but we're getting there. So, yeah, I think that a lot of folks aren't necessarily going to be surprised, but that will go, if the 50 basis points, if that is the modus operandi for the BoE, I think that could be a very hawkish thing for the pound. I really do. And that's just sort of one of those deals where the market says, we don't think you have the guts to raise it 50 basis points, and then BoE does. Then where does that put us? It puts us with a stronger pound. I don't think that's priced in. I don't think 50 basis points is priced in. I heard scuttlebutt of 75 basis points possible earlier. So I don't know. I think that one's wide open for interpretation, Freshman. So the pound's going to be all over the map. Check your margins with your brokers, because your brokers will be cutting your margins up, or they will reduce their exposure ahead of that BoE. And typically the pound is sort of a heavily margined asset anyways. So you got to be sure that you check in on those margins intraday and beyond. All right, guys. So that's essentially where we're at with the majors. Big time stuff. Just a quick look around the horn. Just at your risk assets. I mean, crypto's catching bids. This is sort of a telltale sign that the dollar is taking this one on the chin. And that's no kidding. Let's see, with it right there on Bitcoin, you're looking at a high of 23,954 in January, and we've traded 23,822 as the high. So keep a close eye on January's high. This is fairly bullish for risk assets. It doesn't get much more risky than cryptocurrencies. So big January. What are we going to see with February? Risk assets often running for February. And I realize that it's just sort of, I won't say it's a moot point, but this reversal we saw today in the US 30 was astounding. I mean, number one, big picture, what do you have here? Inside months, so you've got a compression. It's a pennant here on the monthly. So there's your run, there's your pullback, there's your rotate for January. Now, February is threatening to go higher. I mean, my technicals that I'm looking at, I'm saying, wow, the top side of this market could really happen. Take a look at the range on that doji. I mean, that's an incredible range. We went right down to 78%, sort of rebounded, and then look where you're at. Look at the size of that doji. Look at the legs. Long-legged doji, I'd say. Tremendous uncertainty. Tremendous uncertainty. Let me see yo-yo. I think it's a bull trap, Shane. I see dollar strength coming very soon. I tend to agree with you, yo-yo. Anytime somebody says rates are going up and we're going to, readjust our balance sheet and the risk assets go up, you sort of have to throw the penalty flag and call shenanigans on the whole thing. The problem is that the prices are going up. And they're going up, and they're going up, and they're going up. And this isn't just an isolated incident. We've been catching bids for a while, specifically with the US 30. If you take a look at this chart right here, and we have no business catching bids. We have no business catching bids right now in this market. Doesn't matter what I think. Take a look at it. This is bullish, bullish, bullish. Boom. Rally. Flat line. There's your hot open in January, sell off, and now we're grinding north. And it looks to me like we could be in for a major washout to the bull before we get that retracement, that deep retracement that pretty much everybody's waiting on. I don't know that the dollar bounces back tomorrow just because of the BoE and the ECB. Those two could really sink the U.S. dollar in a lot of ways. So we just have to take a look at and see what it's up. Let me see. Trade what you see, not what you think. Absolutely, yo-yo. You can get in big trouble. You can get in big trouble trading gut feelings. I tried to get away from that a while back. All right, everybody. We have really a lot planned for the next several days. So stay tuned. Connor, Nick and Connor, I believe we have a community trade ideas breakdown. I'm not sure that there's been a few changes to the schedule, but if we don't have one tomorrow, it's going to be, we'll have one next Tuesday for you. So that'll be a lot of fun as well. There's so much else to cover. I'm not sure we can do the trade breakdown until next week. Right now, though, the next one up is the Bank of England, European Central Bank. Nick and Connor are going to have the coverage on all those. So I think they're going to be on tomorrow for 3 or 4 hours, something like that. I'll be coming in. I'll be joining them when I get out of bed, probably for that ECB presser, and maybe talk a little shop and really break down those overnight moves and see what we have. So that tomorrow, the Thursday session here, is going to be a big one. So be ready for anything. Is it going to be that textbook buyback? Are we going to see, that textbook contrarian play where you're going to see the markets react in an opposite fashion that they did to the Fed meeting itself? I think it's possible. I think it's very possible. And then lastly, NFP. We got NFP Friday. Be sure to get over there and check our raffle out if you haven't already. Get registered, all prepped and ready to go for that. So that's what we have in the cards. I think that it's going to be a big time 48 hours, and then we'll have all the normal stuff. We'll have the YouTube video drop Friday, and then we'll have the weekly preview out for next week's trade. So next week, I actually is building the preview out a little bit, taking a look at the calendar. Next week is going to be a more true week of price action. This week's been brutal. This week's been choppy and directional moves and whipsaw and a lot of debate, a lot of uncertainty. So we got 3 key events left, 3 big market drivers left in the week. Be sure to tune in. All right, everybody, I'm going to kick off here for a few hours. I'll see you bright and early for that U.S. Open, probably towards the tail end of the ECB stream. We'll take a look at our levels. We'll see where we're at, see how the fundies have treated us. And until then, trade the action well, and we'll talk soon. See you.